There's much debate in the markets as to whether or not we have already started out or just about to encounter a new supercycle in the commodities space, some suggesting it could only be very short-lived if indeed it does happen at all. Let's now catch up with a regular guest that we have here on IGTV, John Meyer from SP Angel. John, it's good to talk to you again. I know in previous interviews we've already discussed or tentatively discussed the supercycle aspect of the commodities markets. Where do you think we are? Do you think we are just about to approach or indeed having already started out on a new super cycle within the commodity space?
I feel, and I'm putting my personal money behind it, that we are at the beginning of a new super cycle. Prices were hit low levels last year when economies collapsed and economies locked down. But no, I think we're the stimulus money that's being pledged, and the new projects, new development, new infrastructure projects coming through are going to create very substantial new demand. And what we're seeing is investors getting behind this demand. I'm told that almost all commodity trading funds and related traders are long on copper, long on other metals, and prices are being driven, as we've seen in news this morning, by certain Chinese traders. There's an infamous copper trader in China who's behind this latest move, and a brokerage firm that's gone very, very long with its clients and is in command of the May, June, and July futures on the Shanghai Stock Exchange. But the fact is that the Chinese and the rest of us believe that there is a super cycle. We believe there is new demand coming through that is likely to outstrip supply, and this is what's driving prices.
What is a super cycle? Because I mean, we've already seen, let's take copper for an example. This time last year at the COVID lows, I think we were talking 11 months ago, something like around about 4,300 on the London Metals Exchange. Here we are now at 9,300. So we've more than doubled the price already. If we are at the beginning of this super cycle, what should we expect on the upside from here?
Well, I think what we should expect is 2, 3 more years of sustained demand growth for the key commodities. So with the key commodities being iron ore, steel, copper, nickel, zinc, all those sorts of things. And in the middle of this, we've got the electrification of transport and renewable energy. So there's going to be a lot of copper, for example, used in electric vehicles and in the offshore wind farms that we're building to create the power for those electric vehicles. So we're decarbonising by closing coal-fired power stations and things like that, and we are going for more green power technology, solar and wind and hydrogen and things like that. And of course, this is changing the demand or increasing demand for a number of key commodities. And we're coming out of a period of low investment in the mining sector. So the mining companies are struggling to ramp up production to keep up with it. So if I was going to create a definition for super cycle, I would base that on strong and sustained demand. Let's say demand of over 4 or 5% for copper, for example. But at the same time, we've got this problem with the supply chain, which is struggling to keep up. So I think we're going to see ongoing supply demand imbalances where we end up with deficit situations in many of the world's key commodities.
This is an interesting point, of course, isn't it, when talking about the demand and supply balance. And we have before spoken about the fact that there's just not enough mines around supplying the sort of metals that we got. So we get this uplift in prices. We've seen it across the commodities space, I know. Do you think that with these higher prices, there is now more of an appetite for these explorers to go out, find money initially, of course, to do the work, and then go out and find new resources? Do you think deep down the resources are definitely there? It's just a question of finding the money to do it. And of course, as I said, as prices rise, it makes it more economically efficient for companies then to go out and dig and try new areas.
The metal's always there in the ground somewhere. The question is finding it. And sometimes it's easier to find it and sometimes it's not. I mean, there are developments in geophysics that help geologists find things, but then of course a lot of the easy stuff's already been found. I mean, going into countries like Ecuador opens up new areas, but there aren't many of those new areas left in the world. Certain areas which are rich in commodities like copper, the DRC, the Democratic People's Republic of the Congo, still very difficult to operate in. But there are areas where companies are more comfortable, where we see the major companies almost fighting each other to get involved with the explorers who've got the licenses, the prospective licenses, and who are very busy running around trying to find new projects for the next generation. And yeah, I think, I mean, that's why this money is coming through into the marketplace. And I'm not sure, I don't see equities as overvalued at this stage. I think that is still to come.
As an analyst, do you find shy of going into some areas around the world because of the political sensitivities around this, despite the fact that there may be some resources there? Some war-torn countries around the world, of course, they might have resources, but we don't really want to go there because we don't want to engage with corrupt regimes. How difficult is it to find these new projects?
It is difficult to find new projects in shall we say, good areas. Ecuador works quite well, for example, whereas the Congo is still very difficult. But of course, it's all about risk reward. So if you've got a project in the Congo where the grade of the copper is 3, 4, 5%, then you'll get over the hurdle of it being so difficult to work in. Having said that, the costs of working in these difficult areas are very much greater. So you really do have to have a project that is exceptional. I would be very reticent about sending our analysts into some of these areas, particularly if there's any form of conflict going on in that area. We won't want to go there, and we won't be recommending investor funds go into those areas as well, particularly if those funds might somehow find their way into supporting shall we say, a less acceptable regime. So yes, it does narrow things down. That's why we see countries like Zambia as so favourable, because the rule of law works. Sure, you get the odd politician that says the odd crazy thing, but guess what? That happens in our own country as well. So no, most countries in the world are fine. It's more about the quality of the assets.
So, as an analyst again, where are you best positioned to benefit from this super cycle if it does take off?
Well, we do see that the AIM market offers quite a lot of well-regulated, well-governed exploration companies, and there's a whole range to choose from in just about every metal going. And investors, not only do they get the liquidity within that market, they also get there's usually a bit of a discount applied to these stocks as well. And I think that discount will narrow. And I think there's these companies over time. And remember, time can be your friend. I mean, every investor wants to make some quick money. But the fact is, if you stick with these companies, most of them increase the value of what they're doing as they go along. And that for me is incredibly rewarding. So we often see, particularly in the copper space, you see a small copper company exploring away for years and finding a bit here and a bit there. And then one day it makes a big discovery, and the value jumps, and then it adds more value to that discovery. And then a major comes along and either does a deal to partner with that business, or they just finance it through bank lending or offtake finance or something like that. And then the valuation jumps again. And for me, the AIM is an incubator market for developing much larger companies, and we do see that from time to time.
That's an interesting point, actually. Do you see as an end game for the super cycle that we'll see more M&A in the business?
There will be more M&A. We can see that coming through already. And what we'll also see is the development of a new raft of mid-tier and larger businesses coming through. But we have to have this incubator market to start that off. But yes, many of these companies, I think, are now at a point in time where they're able to make the next leap forwards in terms of valuation and development.
Okay, John, it's interesting. Thanks indeed for joining us. Look at the commodities super cycle. Is it started? Are we just about to embark on a new era for the commodities sector? That's John Meyer from SP Angel. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.